Ladies and gentlemen, welcome back to the channel. We need to talk about an analyst that is smoking funny stuff, okay? An analyst just came out with a new price target rating on AMC stock, and this one really makes you scratch your head. So we're going to get into that. We're going to talk about the Fed minutes that just came out and everything else you need to know regarding AMC stock today. So let's get into it. First things first, analyst that is smoking funny stuff is this guy. Let's see his name. Eric Handla of Roth MKM. He gives AMC a sell rating with a price target of 50 cents. This came out today. 50 cents? Dude, what do you expect from AMC? This is crazy. AMC stock has actually been performing quite incredibly over the past couple of days, minus the 35% drop that we just seen a couple days ago. Okay, let's pull up AMC's charts, break it down a little more, okay? And I gotta scroll it out. Let's see. So AMC hit a low of $3.18 per share. Even earlier today in the video I made earlier, AMC stock was down a lot more than what it is today, down about 4.5%. And take a look at the stock, only down about a 0.5%. Kind of in-line performance from what you've seen for the indexes. Even better than a lot of small and mid-cap stocks today. Most of my portfolio is down a lot more than AMC. AMC's kind of a bright spot in the portfolio today. To slap it with a 50-cent price target, the lowest price target AMC has, that is kind of ridiculous. You would need to see like the business just crumble at that point to get that price target to actually be realized. So I don't know if that's a troll, I don't know if that's serious, or if they have some kind of insight on something really bad coming for the business. But AMC in theory now is even better than it was before because they do have the chance, well, not the chance, but they do have the ability to raise capital after what's going to be the reverse split, which is August 24th. And again, I'll say it again, I've said it before a couple of times now, plenty of times now, to be honest, but I want everyone to hear this. Just because AMC can raise like 400 million shares or so, billions of dollars of capital, does not mean they will do that right away. You probably don't get any dilution right away. August 25th, August 26th, the rest of that week, probably not going to get dilution. Probably the next week, you're probably not going to get dilution. The markets have come to expect some dilution with AMC, and some dilution is possible. I'm not going to sit here and say it's not possible, but it just doesn't make a whole lot of sense from a business standpoint to dilute your shareholders after a big drop like this. You don't want to crush the stock. In theory, what you want to see happen is actually squeeze shorts out of short positions and then raise capital when AMC stock is much higher, because the higher the price of AMC, the less you actually need to dilute the stock. Now, keep in mind, Adam Aron does own a decent amount of AMC stock. He has some of his money invested in AMC, right? Most of his salary is paid with AMC stock and AMC stock options. So he definitely wants to see the stock go higher before he did raise capital. And I think that's kind of common sense. Now, AMC's management does not have a lot of that sometimes, so take it with a grain of salt for what I say. But I think it's very applicable to any situation. Usually you don't want to massively dilute shareholders after you've already seen the stock fall. So keep that in mind. Now, let's talk about everything else that is going on as far as AMC land today. Not really huge news, although we did cover news earlier that now APE stockholders are trying to sue AMC with another class action lawsuit saying that if AMC stockholders got the settlement, then APE stockholders should also get the settlement because it's the same equity. It's the same thing, which that does make a lot of legal sense. I'm obviously not a lawyer. If I was, I probably wouldn't be doing this, although I do love making these videos, so I probably would be doing this, and I'd much rather do this than be a lawyer on top of the real estate stuff that I already do, but that's neither here or there. It makes sense. It makes sense. why ape holders are trying to sue AMC legally standing. So we'll see what happens with that. I don't know ultimately if this is going to hold up the August 24th conversion or if it will still be allowed to go through or not. That's kind of to be continued. Now, if we take a look at the option activity today, let me say AMC stock is down 1%. 138 orders totaling $34.17 million. Positive order value of 2%. It's been very negative. It continues to be very negative, which, think about this logically as well. It doesn't make a lot of sense. You just had your negative catalyst that dropped the stock 35%. Why are you seeing more shorting activity now and more demand to short AMC stock and more bearish options now than you've seen before? That doesn't make a whole lot of sense to me. And you really can't make it make a whole lot of sense to me because it will never make a whole lot of sense to me. You've already seen the stock fall this much. Why would you be short in the stock? Just let me know down below in the comment section why you think you're seeing this strong level of shorting activity after what we have already just seen. Nonetheless, positive order value of 2%. $34 million is a large amount, and that is probably having a negative impact on AMC stock today. I think that's pretty easy to see. Now, a big disparity that I see and big divergence that I see right now is the estimated short interest of free flow is 28.2%, but the free flow out on loan is 40.5%. Usually you don't see a spread this wide. 5%, that's usually the spread that you see with AMC. Right now it's around 13%. So maybe that means the short interest is going to go higher. Shorts not covering. A lot of people thought yesterday that maybe shorts were covering based off of that 8% move or so. That does not indeed look like what is actually happening. So do keep that in mind that probably we see the short interest go higher. Now the short score is at the highest level it's ever been at. It's never been this high at 93. $536 million worth of short positions currently in AMC stock. Shares out on loan 208.89 million. Days to cover 7.71. Cost to borrow trailing 3-month average up 164.3% at 283.71%. And utilization is at 83.5%. Some absolutely horrific numbers that you're seeing here for these short sellers. Terrific if you are an ape or long in AMC, in other words. Now, cost to borrow fees, again, this is one of those head scratchers because you would have expected after this 35% drop, after this court ruling, that you would not see cost to borrow fees jump this much by 2.5-3 times where they were before this ruling from the courts. But that's what you're seeing because a lot of people have a lot of interest in shorting AMC right now, which is strange because when these cost to borrow fees are 900 to 1,000%, you're paying 2 to 3% every day in interest payments just to be short in AMC. That means if you hold this for like a month, you're not going to make any money. You're going to lose a substantial amount of money. So kind of weird, kind of one of those weird things. Cost to borrow max at 1,040%. Cost to borrow average 983.5%. Cost to borrow minimum 808.5%. Cost to borrow fees from interactive brokers 879%. Earlier in the day, it was 921%. Some absolutely crazy numbers that you are seeing. And AMC stock is on the threshold securities list. We do have some new FTD numbers that did come out today, and kind of pushes this situation down the line as well. And you're actually seeing a tick up again in FTDs, which I think is interesting considering what just happened. So today you got about 13 million trailing FTDs. Tomorrow you're going to have, let me see, about 13 million trailing FTDs. And then on Friday, you're going to have around 11 million trailing FTDs. Now, for next week, you even start off at about 10 million. You rise to 12 million, back to 11 million, back to 12 million, back to 12 million again to end off the week. And then you start to fall a little bit more the week after that. Now, the closeout date over here is going to be in September. September 4th is the last T+35 date that we have on this chart. These numbers just came out, and you're still in the $6-7 million share range. 8 million as far as August 28th. So, or 29th, August 28th, you're at 11.5 million. On August 25th, you're at 12 million. So this could be a factor that is helping AMC a little bit right now because these have to be covered, and it has a dilutive effect on AMC before they are covered. And then after they're covered, it's kind of like reducing the float, kind of like a share buyback from a company that does that, right? So that is having a positive effect here on the day for AMC stock. Now, let's take a look at what the Fed officials are saying about the FOMC minutes, what they said at the last Fed meeting. Now, they are seeing upside risks to inflation, possibly leading to more rate hikes, the minutes show. Now, it says right here, quote, with inflation still well above the committee's longer run goal and labor market remaining tight, most participants continue to see significant upside risk to inflation, which could require further tightening of monetary policy, the meeting summary stated. Well, some members have said since the meeting that they think the further rate hikes could be unnecessary. The minutes suggested caution. Officials noted pressure from a number of variables and stressed that future decisions will be based on incoming data. Quote, in discussing the policy outlook, participants continued to judge that it was critical that the stance of monetary policy be sufficiently restrictive to return inflation to the committee's 2% objective over time, the document said. It goes on to say that almost all meeting participants, which included non-voting members, were in favor of the rate increase. However, those opposed said that they thought the committee could skip a hike and watch how previous increases are impacting economic conditions. Participants generally noted a high degree of uncertainty regarding the cumulative effects on the economy of past monetary policy tightening, the minutes said. The minutes noted that the economy was expected to slow and unemployment likely will rise somewhat. However, staff economists retracted an earlier forecast that troubles in the banking industry could lead to a mild recession this year. And a big concern was real estate. Specifically, officials cited risks associated with a potential sharp decline in CRE, commercial real estate valuations, that could adversely affect some banks and other financial institutions, such as insurance companies, that are heavily exposed to CRE. Several participants noted the susceptibility of some non-bank financial institutions such as money market funds and the like. For the future policy, members emphasized two-sided risk to loosening policy too quickly and risking higher inflation against tightening too much and sending the economy into a contraction. So basically what the Fed is saying here is we're going to look at the data, we're going to look at what's happening, and let me just summarize this in a nutshell for you. We're going to look at what's happening, we're going to look at the data, but odds are we really don't care about your stock portfolios. We don't care about the economy more than we care about getting inflation down to 2%. So until we do get a major market crash, a major market event in general, real estate falling off of a cliff, problem in the globe, something crazy happening, a black swan event, we're not going to be cutting rates because it looks like inflation is more likely to go higher from here than to go lower from here. That's the long story short of what the Fed is saying today. This is causing stocks to fall because obviously when the Fed is more concerned about getting inflation down from 3% to 2% rather than sparing the economy of a recession, which could be quite deep if this does last a long time, then that's obviously a problem for markets, and that's not going to be positive. So that is another factor that is weighing on the market today. Now, believe it or not, if stocks do fall and the markets do go through a bit of a crash, as it looks like we are, well, this could actually be to some degree positive for AMC if you're hoping for a short squeeze. Some of the most explosive short squeezes we have seen in history have been during markets like this, where, stocks are doing okay, rates are very high, and then you do go through a crisis and stocks fall. That squeezes liquidity. If AMC can get kind of momentum during that time, that's kind of your prime market environment, because at that point, hedge funds, institutions, they don't have the excess capital to cover on their margin calls, right? Or just their payments on maybe their cost to borrow fees, things of that nature. So they have to actually start closing out of those said positions. So let me know what you guys think about all of this down below in the comment section. That's going to do it. Thank you for watching. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. I will see you in the next one.